Yes, 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 yes. Let's turn this down. They say at weddings, dearly beloved. All right, man. We gathered here to celebrate the money flow. Let's turn this news down. Let's turn down the church organ. So, if you've been around a minute, let me kill the comments on. We're just going to turn the comments off for a minute on it. Instagram. Hopefully everybody can hear me. I'm using one computer, so if it looks a little discombobulated, it is. Alright, looks like they can hear me. So you're going to hear some noises. I'm outside. I got guests staying at my place in New Orleans, so family. So they're sleeping in, missing church service, as it, so to speak. The money flow is really, it's more than, stocks. And I think once you start messing with it, you'll realize that it's bigger than that. But you can't dump all that on someone right off the bat. And if you're looking at this chart, you'll notice only thing you see on here is that green line. That's 20-day moving average. Does it have to be a 20? Now, we use a simple. And moving averages are just, they're indicators. The problem is they're lagging indicators, meaning it's always looking at the past. And there's no way to interpret the future without simply guessing. That's what people are doing, They're kind of in guessing. And what the money flow allows us to do is to try to make some order out of chaos. And so when you look at a stock, you're going to see chaos. Well, what I discovered, and I didn't discover it, I found bits and pieces here and there. But what I was able to do was to kind of put it all together, Like the iPhone didn't invent the camera, it didn't invent the radio, it didn't invent websites, it didn't invent anything on it, really. It's just put together a bunch of things and then logical set of steps that make it make sense and make it a useful tool. And that's what the money flow is. At the end of the day, the money flow is just a tool to try to help you make sense of price and somehow help us determine, bottoms, tops, and then bottoms. And the guys say, well, what chart is this? It don't matter, man. Everything moves similar. And, it doesn't do it perfect, but that's the general flow. And then it moves up. And if we're lucky, let's save this one here. If we're lucky, like this is the chart of ENVX. And again, that don't matter. You can go look at utilities. You can go look at the train sector right now. Not all transportation. Trains have really done well. You can go look at Walmart. Recent run up in oil stocks. They all look similar. So, and what happens is they move in these patterns. And if you have my book, The Money Flow, these are stages. And so this here, turns into just a giant stage 2. Giant stage 3. And what I figured out in trading is really very limited things that a market can do. And, you can sit around and try to read the news and interpret the news. And you're just fucking guessing, man. You have no idea how 1 million people or 1 billion, however many millions of people every day get up to play this game. And a lot of them are a lot smarter than you. Okay? A lot of people that get up to play this game have algorithmic computers and programming, and they know more information than you know. And anything that you read somewhere, they already know that in seconds. And so this is why you'll see stocks respond to something super fast. Like, well, you can't respond to that, man. And so what I began to realize, I can't do that. I can't move that fast. I got a life. I got family. I got a fucking job. I got things to do. And so what I decided was I don't really care what's going on out there. I play the hand I'm playing. And so I'm watching the stocks I'm watching. And if I have time or want to put it into my day, I'm researching and studying, and I'm always doing that. But what I'm ultimately trying to do is to play the hand that I'm playing. I really don't care about other hands, And by doing that and focusing on what I can do and what I can control instead of chasing, then I give myself an edge. And so what I've determined is, what is a buy signal for me? What is a take profit signal for me? And what is an exit signal for me? And those are the three basic components of trading. Is how do you enter? What's your so-called the trigger? So if you have the money flow book, we talk about this, right? That the 5-day moving average crossing over the 20-day moving averages is like a trigger, right? But we have other triggers, and it's trigger is in the sense of pulling the trigger. One trigger for me, and none of these are foolproof, but when price breaks above that green line, that's a trigger. It triggers like flipping a light or pulling a trigger on a gun or a red light or a yellow light or a light turns green. It's a trigger, and it gives you, the ability to make a decision. And that's all it is. And all I'm looking for is a series of triggers. And I put them together in kind of a recipe, so to speak. And when they all line up, it tends to do the same thing. And what I've realized is it's not certainty. Markets don't move in certain. There is no certain. I hope that's not too loud. They keep coming on and off. I'm outside, like I was saying. And so my goal is to try to interpret this process of the markets moving in what I call the money flow pattern, and its price. So each one of these bars you see, this is not confusing. And if you've never seen it, it's like we've stepped back into 4th grade and we're going to look at a thing, and the teacher takes a marker and she draws a line on the board and she says, listen, that's one day. And so the low, and maybe you know this, maybe you don't, but if we look over here, that's the low of the day, and that tick to the left, I talk about this in the Getting Started with Stock Charts class, that tick right there is where the market opened. And that tick to the right there that you see is where the market closed. And from here to here is the high to the low. And then if you're trading with, a lot of people use candlesticks, it's got a body to it. Well, then that's going to be the full day, right? I use bars. It doesn't matter. There's no magic to candlesticks. There's nothing special. They're just what they are. And as we look at a series of these days, so no one day really matters to me, other than maybe that day's a trigger day. But the only reason it's a trigger day is because of a combination of other days. And so today's only valuable when I look at the other days. And so as I watch price and what I'm expecting price to do, let's see if I have a picture here in the money flow book. These just from the book, you'll see these moves. When was this? 2019. And you're going to see these examples. And the reason I have all of these charts in the book is you should memorize them. Meaning, when I say memorize them, it's not this particular stock, but it's this particular pattern. This stock doesn't even exist anymore. It went out of business. But if you notice how it moves, right, you'll see this pattern. And we haven't even added the RSI, but as you watch, and you can see it here where it goes up and then over and then down. But what you have to understand, here, let's pull up the Peters report, is it's never perfect, man. But there are a few things that are certain. And one of the certainties is that assets that produce cash flow or growth over time, these assets, appreciate. These assets appreciate over time. And we call that the wind. And the wind, the easiest way to determine that is when we say, quote, the market. Well, the market is like 5,000 stocks. So what is the market? You know, if you say the crypto market, what is that? Is that ADA? Is that Bitcoin? What is it? So we have to have some way of determining what we think is the overall market. And for me, it's the S&P 500. That's the average of 500 of the biggest stocks in America. If that is trending up, or for me, moving above this green line, then I would say the general direction or the wind of the stock market is to the upside. And what you'll see is it moves to the downside very little. And when it does it super fast, and then it ends, and then it turns, and then it heads back up. And we saw that recently. Now here's the problem with an index. So this is the Dow Jones. It's made of 30 stocks, right? And so the index can be a little harder because it's a little jumpier because there's a whole lot more stocks. But if you're looking at this, just the general picture, you're going to see, now ignore these little dips, okay? I'm just trying to get you to see the picture of what is happening. And then it goes sideways, and then it runs up. And what you'll find where it stops is typically where it stopped before. And so in addition to this idea that over time prices move up is super important. If you don't believe that, cannot trade the money flow. It's impossible. It's what it's built upon. Let me make sure everybody can still hear me over here. Last Sunday, well, I'm not even gonna lie, I didn't already, and they made it sound like I just heard it 2 minutes ago. All right. So this pattern here, you'll see in the very opening of the book, I say the money flow trading system is a fractal pattern, meaning it happens all the time, and it happens at different time frames. That's my number one question. I start showing people the money flow. This always cracks me up. Like, I start showing you the money flow, and before people even accept, what the hell, dude?